You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back. It's Web3 Wednesdays, and today we're really diving into the crypto space. Things are moving fast.
They really are.
We're going to connect some dots, look at how regulations might be shifting, how capital's being raised differently, and how AI is stepping into the picture. It's quite a mix.
Absolutely. It's all about that intersection, isn't it? Financial innovation, institutions getting more involved, and like you said, these tech breakthroughs defining what's happening right now.
Okay, so let's kick things off with, well, the Fed. Vice Chair Michelle Bowman. She's been making some waves, hasn't she?
Yeah, pretty strongly urging the U.S. to, get on board with crypto and new tech. She basically said regulators should ditch the overly cautious mindset.
Which is quite a statement from the Fed. To stay competitive, she argues.
Exactly. And it's not just talk. They've actually scrapped that specific crypto bank supervision program.
Yeah.
And eased up a bit on stablecoin activities. She had that interesting comparison to like learning to ski. You can't just read about it. You got to put the skis on. Suggesting Fed staff should hold a little crypto to understand it.
Huh. Interesting analogy. And this is happening while, the market's doing its thing. Bitcoin dipped a bit, ETH too, ahead of Powell's speech later.
Markets are always watching the Fed.
Yeah.
Around 113K for Bitcoin, $4 1K for ETH recently. Just market movements.
Okay, shifting gears slightly, but still on innovation, capital raising. This bullish news is pretty wild.
Oh yeah, the first U.S.-listed company raising over half its IPO money in stablecoins. That's significant.
It's huge. $1.15 billion across 8 different stablecoins, mostly, get this, minted on Solana.
And custodied by Coinbase, right?
Yeah.
It really shows stablecoins aren't just some fringe idea anymore. They're being used for serious institutional capital formation.
Bypassing some traditional routes, maybe?
Potentially, yeah. And speaking of efficiency in stablecoins, this fits perfectly with Circle Gateway hitting mainnet.
Ah, tell us about that.
Well, imagine having just one USDC balance, but you can use it instantly across different blockchains, like moving funds between Arbitrum, Ethereum, Polygon. 7 chains supported now.
Instantly. How fast?
Under 500 milliseconds. It tackles that whole fragmented liquidity problem head on. Makes cross-chain stuff way easier for businesses.
Wow. Okay. And you still control your funds.
Exactly. Non-custodial. That's key.
Okay, so faster, easier movement of capital. Now, what's actually fueling the recent market moves? There's a theory it's not just the Fed this time.
Right, the AI-generated liquidity thesis. The idea is that massive gains in AI-related tech stocks, those hyperscalers, are sort of spilling over into crypto.
Cascading down.
Yeah. We saw those huge inflows into ETH ETFs, right? Over $1 billion in a single day. Plus, companies like BitMine, they're expanding their treasuries, holding more digital assets. We're talking $24.5 billion there.
That creates real buying pressure, persistent institutional buyers.
Definitely. But, this brings up a long-standing issue in crypto, the user experience. It's still pretty complex for most people.
Has been for a decade, yeah.
So enter DeFAI, Decentralized Finance AI. People are predicting this could be the breakout category for 2025.
Okay, DeFAI. How does AI help here?
Think about AI-powered interfaces. Instead of complex clicks and wallet addresses, you just use simple text commands, like literally typing swap my XRP for link or bridge my SL to ETH.
Whoa. Like talking to your crypto?
Pretty much. Making it accessible, safer potentially for, mainstream adoption. You wouldn't need to be a blockchain whiz.
That could be a game changer for usability. Now, looking at corporate strategies, we mentioned BitMine, but others are getting creative too.
SurePlink.
Yeah, their focus is interesting. Accumulating ETH, tracking what they call ETH concentration in their treasury. That metric's apparently jumped 94%.
And they boosted their ETH holdings significantly. Over 740,000 ETH now. It shows real conviction.
It does. And overall, these digital asset treasuries like corporate crypto holdings, they've raised $15 billion this year. That's actually outpacing traditional VC funding in the space right now. 15 billion. Wow. The institutional money is definitely flowing in.
It really is.
Yeah.
And it reflects, I think, a changing view on tokenization.
Yeah.
Moving away from just pure speculation towards seeing the value in transparency, legitimate services, access, time, information.
More utility, less hype.
Hopefully. But we also have to talk about risks. There are always risks. For example, you've got about $6 billion of Athena assets being used in DeFi protocols like a Hive.
Borrowed and lent.
Right, leveraged and looped. You borrow against your assets, use the borrowed funds as more collateral, borrow again. It magnifies everything, gains and losses.
So what's the specific worry there?
If Athena's stablecoin, USDC, were to depeg, lose its dollar value, all that leverage could put serious stress on the stablecoin markets. It's a concentration risk we need to watch.
Okay, so definitely still risks to monitor amidst all this innovation.
Always. It's a fast-moving space.
So wrapping this up, what's the big takeaway for you listening right now? We've covered a lot, central bankers warming up, new IPO methods, AI potentially simplifying everything.
It's an incredible amount of change happening all at once.
It really is. The pace is just relentless.
I think the thing to really ponder is how all these threads, traditional finance, AI, decentralized tech, are weaving together. It's not just changing financial systems. It might fundamentally alter how we think about value, about ownership, especially in this digital age.
A lot to think about. We'll definitely keep tracking it here. Thanks for tuning in.
Spoken Tech for your ears.